Hey, and welcome to July Tax Tuesday. I'm really excited to have you here. And um, yeah, let's get started. So my name is Heather Ryan, and I'm the owner of Tax Queen. And I do the first Tax Tuesday of every month. I answer questions and I go live to help my clients. So my clients are RVers, digital nomads, and travelers, because I'm a traveler myself. So I did get quite a few questions ahead of time, and that's what I'm going to go through first. If you're here live, feel free to drop in the chat where you're joining from. And otherwise, I'm going to jump in. I always do the questions that I get submitted beforehand. I go over them first. If people are here live, then I will dive in and kind of have a back and forth or answer some of those live. But otherwise, I'm just going to dive in and let's see. First one I got is when a husband and wife team 51% and 49% shareholders in an S corp, and there's a distribution from the business checking to a joint personal. Can you split it in their bookkeeping system, or do they need to have separate distributions to comply with the S corp? Normally, I think in a husband and wife, spouse distribution, I think it's fine to just split it in the bookkeeping because it's going to the same account regardless. If you have two different partners, obviously you would have two different distributions to their own personal accounts. So, but also be aware, like community property states, husband and wife are kind of the same 50-50 anyway, so it doesn't matter. But yeah, I think that's fine to just put it into the bookkeeping software. As long as it's recorded properly, and it on the tax return will also do that 51-49 split. So yeah, hopefully that answers that question. And let's see. So question number 2, I am a 1099 consultant, 100% remote, 100% nomad. How can I do retirement contributions to help reduce taxes? If I open a new account and contribute during 2025 tax year, would you recommend this path as a way to save for later when I'm no longer a consultant? So yes, if you're interested in retirement contributions, it's always a good idea. It's always tax savings. It depends on income and all the other things. I usually see anywhere between 10 and 20% tax savings, depending on the tax bracket that you're in. There's also, depending on income and how much you have extra to contribute, you could just do a traditional IRA contribution. You could do a Roth IRA contribution. The Roth does not help our taxes at all right now, right? So we pay the tax now on the income, and then when we go to take it out later, it's tax free. So that's the benefit there. But you could do a traditional. So, if you're over 50, that's 8,000, might be going to 8,500. So I'm still on 2024 numbers. So yeah, but it's 7,000, 8,000. So it's a pretty good chunk right there. And you don't have to do any special account for being self-employed. So the SEP IRA and the solo 401k are for self-employed individuals, business owners. Traditional IRA is for anyone. So yeah. I hope that answers that question. I do have some articles also on my blog if you're interested in checking them out, talking about retirement contributions and how they might help you tax-wise. So that might be worth a read as well. Yeah. Let's see. The next question was very long and very detailed, very unique, personal situation. I did want to just kind of reiterate that for very specific, unique situations, I do offer consults. So if you're interested in scheduling a consultation, so that is a time just for you to get your specific questions, your situation. You get my attention. I have half hour or the hour ones, and you get to pay for that consult and answer specific questions related to you. And I try my best to get the answers right on the call. Sometimes I might have to go behind the scenes or and do a little math, behind the scenes to get you updated answers. But if you're interested, that is how you book a consult. I did pick out a couple of things and pointers that I'm going to address from this question. And the first thing I see is questions really about domicile and residency. So domicile is required, right? As US citizens, we have to have a domicile, or sometimes called a residency, and they are kind of different things, in a state. There is no ifs, ands, or buts. That's what we have to do. If you're an expat living overseas, you can usually cut ties with states. But even then, I usually suggest switching any kind of domicile stuff to a tax-free state so that any tax state isn't going to argue about it. After so many years, the states don't really usually argue. But if you still have ties, and what are ties? So ties to a state or driver's license, where our car, auto, RV, whatever vehicles are registered, where they're insured, where we are registered to vote. It could also be ties to a doctor, could be ties to a church or any kind of community organizations. Those are our ties to a community, and they create that domicile. So this is a legal thing, but it also kind of goes over into the tax world. So we have residency, and residency is usually really simple, right? I have a house, I have a condo, an apartment in some state. That's very clear cut. But as somebody who travels full-time, you still have ties to a state, and that is your domicile. And many people choose to move to a tax-free state. And I think many of you know what those are: South Dakota, Florida, and Texas. And I have really recently started dissuading or discouraging, I guess, from doing South Dakota. So South Dakota is very unfriendly. They're moving more and more laws to make it less friendly for travelers. It is a challenge. And the rules are changing, the laws are changing. They have laws on the books that, could potentially be written into law. Again, this is like, I just don't recommend South Dakota. It's just become too unfriendly for travelers. Texas, Florida, absolutely fine. I don't have any issues with them. I haven't had any, new odd laws to make it challenging or difficult for travelers. The biggest ones for South Dakota, they have a 30-day stay required now. That just passed literally, I think, in the last month or two. And they are not friendly if you're a W-2 employee. So you cannot have unemployment insurance because you have no physical office in South Dakota. So therefore, if you work for a W-2 company, wherever that company is based is where you're going to pay taxes, and you're going to have ties to that state. So I really don't like that. I discourage South Dakota. It is not a good option for travelers nowadays. And I try to steer my clients away from it. I have helped, gosh, like a lot, at least a dozen, if not more. I have either heard questions about it, or I have helped them get away from South Dakota and change because of the laws that are changing in the past year or two. So it has become a problem. And as far as there were questions around an S Corp. So an S Corp must pay its owners who work in the business a W-2 wage. There is no ifs, ands, or buts. If you take money out of the business, take distributions, you also must have a W-2 wage. It is a big red flag. It is one of the caveats of running an S Corp and being an S Corp. That is the rule, that an owner must receive a W-2 salary. If you don't make enough money as an S Corp, yes, there's an exception, right? But generally speaking, I wouldn't even suggest being an S Corp unless you make certain revenue streams, because otherwise it's just a lot of extra paperwork, and it's not worth it. So I hope that answers a couple of those questions. I try to keep this general so that we can help many people, because a lot of times, when you have a question, it's going to be similar to something that's come up for somebody else. So that's why I try to do that. And again, if you have very specific, unique situations, feel free to schedule a consultation. I do a half hour or an hour, and that's just a time set aside to you to get your questions answered. Okay, next question. This one is for those who have homes. sticks and bricks. So is there a tax credit for having energy efficient windows installed? I've had them installed this year and have certificates. So yes, the Inflation Reduction Act of 2022 upped this credit. Actually, it made it better. So you get $600 credit for windows per year. So it resets. So it allows you to do each year. So you could do a few windows each year to slowly replace and get that credit through 2032. So this credit's non-refundable. It is just used to balance any tax liability or reduce your tax liability. You don't carry it forward. So if you don't have any tax liability to begin with, if you're retired or lower income, this isn't going to be helpful. But if you have a tax balance or liability, then that's going to reduce it. $600 max per year. Energy efficient windows. Okay. Cool. This is the last question that I got ahead of time. So anyone else here, feel free to drop a question in the chat and I will get to them. I'm happy to do, a couple live questions. So I'm self-employed LLC, currently working out of a studio that I rent monthly. I recently purchased an Airstream trailer, which I plan to convert into a workspace so I can move out of the studio and stop paying rent. The trailer will remain stationary on my home property and will be used as a workspace. It is not registered for road use and I have no intention of using it that way. I'm wondering if the purchase of the trailer. So in this case, I don't care that it's a trailer. You have a home office, essentially. So generally speaking, I do the simplified method of the home office, which is $5 a square foot, maximized at $1,500. So that would, measure the space. I don't know how big the Airstream is. But that's generally what I do because it's not questioned, right? That simplified method is very simple. There's never paying back depreciation, which we call depreciation recapture, when you go to sell the property. And in this case, the trailer it's not being used as a trailer. So I would just take the simplified home office, because that's what you're essentially doing. It's put on your property. So the utilities and things like that, real estate, property tax, and that's kind of what we're using. So $1,500 max. Take this square footage. So if you have a 10-foot trailer and it's 8 feet wide, you only have what? Yeah, not that many, right? 80 square feet of office. So it's not huge. It's not great, but I would not recommend depreciating that trailer as a business expense because it's not being used as a trailer. It's being used as a home office. It's a very different thing. So those are all the questions that I got ahead of time. If anyone's here live, feel free to drop something in the chat. I'll give you guys a couple of minutes to catch up on that. And sorry, I'm just looking at the calendar here for the next one because I always like to give the next date, and it is August 5th. If you want to write that down. If you have any burning questions in the meantime, feel free to drop them. And is anybody here? Let's see. Sorry, I've got too many windows open here to look at questions. So if anyone has any questions, I'm here for a couple minutes and I'll let you kind of drop them in the chat. And if you have questions in the future for August, drop that link in the chat. So feel free to submit questions for August. Otherwise, I'm not gonna hang out too long. I thank you for participating and showing up. And I hope you have a great summer and a great 4th of July. And if I don't get any questions in the next minute, I'm gonna sign off and I'll see you in August. So again, August 5th, 10 a.m. Mountain Time. It's always the same. And as long as I get questions, I will show up. If I don't get questions, then we'll move on to the next one. So yeah, thank you for showing up. Again, I am Heather Ryan, also known as the Tax Queen, and I will see you in August.